Hi guys, this is Mark Shawson, the Pattern Trader. Recently, John posted this review on our website. I'd just like to give a shout out to John. I'm going to quickly read what John had to say. He said, "The Pattern Trader has turned my trading experience around dramatically. No more robot trades or any short-term time frames. Nobody gets it right in this business all of the time, but Mark has proved to me that his method is the best, with a high return on capital invested and with a risk of only 1 to 2% per trade. Try it, stay with the rules, and you'll be very glad that you did." So that was by John. And John, thank you very much for posting that. And, frankly, I have been knocking it out of the park. As John said, I don't get it right every time, but frankly, I don't have to. I think there's a very big misconception in this business. I used to manage a hell of a lot of money, and the first thing my clients would ask me is, what is your win-loss ratio? Meaning, if you got 88% of your trades right, it implied that you were a great trader. Well, frankly, I only get about 30 to 50% of my trades correct. But I'm only looking for 1 or 2 trades per month or 1 or 2 trades per quarter that are really going to knock it out of the park and make up for all of the inevitable losers that come along. And frankly, I've been finding 1 or 2 huge trades every single month for the last 6 months. And in this month in particular, 2 trades that have really just knocked it out of the park. One has been long pound versus New Zealand dollar. Now, pound versus New Zealand dollar has crashed recently on rumors of some Brexit problems in Britain, the pandemic, and it drove the pound versus New Zealand dollar from a height of 218 all the way down to 190. But I've been saying to our members that this is in a stealth uptrend. And frankly, this 190 area is going to be a bottom that holds. I started buying long positions in pound New Zealand around the 190 price level, and today it's soared to over 194. But the trade that I really want to talk about is that I have been short gold for the past week. And gold has plummeted from a height of 1950 on just a few days ago to a price of 1860. And so we've plummeted $90 in one trading week. Now, this is not a shock for me because you'll see in a video that I posted just last week, we were starting to get into the business end of a symmetrical triangle price pattern. What I mean is that prices starting to get very confined within the very narrow part of the symmetrical triangle. I will post a link of my video that I did last week showing you where prices were at that time. And at that time, when prices were at $1,950 on gold, the ticker symbol is XAU-USD, I was predicting a lower price. And in fact, in my last weekly video report, I said that gold is going to go down to $1,750. And so we've already, come halfway along that ride. We've crashed from 1950 to 1860 right now, and it looks like gold is going to go a lot lower. Now, this was very counterintuitive. This is when the whole world was buying gold. There was all kinds of reasons to buy gold. We had negative interest rates. We had the Federal Reserve saying that they were going to let inflation go unchecked. And every pundit, JP Morgan, and everybody said gold's going to $2,500 and $3,000. So it's not easy being the one person in the crowd where you see something. But I was that person. I've been warning our members that I thought that gold was substantially overbought in the 2,000 to 2,100 price level, and that I thought we were going to get a turn. It just needed some time. And last week, it again huddled up in this symmetrical triangle. I'm going to go to the real-time charts. I'm going to show you exactly what I was looking at that time and what has transpired since. So again, I've been knocking it out of the park, and I can beat my chest on how great I am. But frankly, I just like to think of myself as an observer. I just observe price and time, and that's all I observe. I don't look at moving averages. I don't look at volume. I don't pay attention to the news. I just look at price and time. And so this simple observer has just cracked it out of the park for myself and hopefully for our thousands of members around the world. So with that said, I'm going to go to the real-time chart of XAU USD spot gold and show you what I've been looking at and show you what I'm projecting. Before I go to the real-time chart of spot gold, ticker symbol XAU USD, I just want to reference a couple of emails that I sent out to some of our thousands of members around the world. This email went out just a few days ago on Monday, September the 21st. And again, I was talking about the opportunity in spot gold. The ticker symbol is XAU USD. And at that time, I was highly recommending that our members sell gold at the market because I felt strongly that we had broken out of a symmetrical triangle price pattern and that there was going to be a decline to $1,850 or below. Now, as I'm going to show you on the real-time charts, we're trading about $1,860, so not too far above that call just a few days ago. So gold has plummeted $90 just in the past few days. And you can see, and I will go to the real-time charts in a moment, what I was referencing was this symmetrical triangle price pattern that had formed in gold. And you could see that at this point we had just broken under the symmetrical triangle. With that break, I thought that we would get a much more extensive decline, and that's exactly what has transpired. Now, the next day, after I suggested to our members to sell gold at $1,912, gold fell even further, and I felt so strongly about gold going down that on the following day, just one day after the original email went out to sell gold at $1,912, I sent out another email to put a sell stop, a pending order in spot gold at a price level of $1,894 based on the observation of what I call an inside bar. You can see this was a very small bar. The daily range was inside the range of the prior bar. Now I will go to the real-time charts in a moment and show you what I was looking at for both those trades. But you can see that I suggested to add to the trade. In my analysis, I said I'm currently short gold at 1912, and I'm looking to add to my position a breakout below today's inside day bar, following a breakout below the inside but below the symmetrical triangle price pattern will likely translate to a greater price decline to $1,850 or below. And it turned out both of those emails and trading calls were extremely prescient as gold is hovering around $1,860 right now, and our members are making a fortune. Now I'm looking at the real-time chart of XAU USD. This is spot gold on a daily chart. And this is what I was looking at just 1 week ago when I posted my video. And like I said, at that time, that gold was trading at the business end, meaning at a very mature end of the symmetrical triangle. And I was saying to our members that we are going to get a resolution one way or another. The symmetrical triangle is a neutral pattern. It can either break higher or lower. But I was saying consistently for the last couple of weeks that my thought was that gold was going to break lower despite the hype and everything else that's been going on. And you can see the more and more that we got constricted at this end that we were looking for some kind of resolution. So when it broke out of this symmetrical triangle, I suggested to our members to sell right there at 1912. And then you can see we had this inside bar just in yesterday's session, where you can see the high and low of that trading session was within the high and low of the previous session. So this is like a compression. It's like a coil. It basically builds up energy, and by deducing, where this thing was going to break, I deduced that the energy was going to keep breaking to the downside. So I suggested that we add to our position. The original position, you'll remember, was at 1912 right here. Then I was looking to add to my short position at 1894, and you can see right now prices are trading at 1863. So collectively, these two trades have aggregated to a total profit of 800 pips. So a fall from 1912 right here and then the additional trade at 1894, and we're trading at 1863. So we're making exactly 800 pips so far on this trade. Now, I think based on what I'm looking at gold, gold is going to go down a lot further. I see the trajectory going down to the breakout area right around the $1,750 level or further. So we've had a tremendous breakout in gold. We've made a ton of dough already, but I see that there is some support right here, but ultimately that gold is going to go a lot lower. This is a graphic of my own trading account in which I took the same trades that I sent out to our members. Remember, it was a sell in gold, XAU, USD, initially at 1912. The second trade was at 1894. The current open market price is at 1863. So by making 800 pips on gold collectively thus far, I've bagged a total profit of over $329,000. Now, this is an open profit. These profits can go higher or lower. I do expect gold to keep going lower, in which case this total gain would increase. So I hope you got a ton of value out of this video. If you would like to know a little bit more about my trading methodology, if you would like to know how to capitalize on the monster moves in the market, I highly suggest you sign up for my weekly video report. The weekly video report is available for the grand price of anything you want to pay. So you nominate the price. We'll put a link below this video. Sign up for the weekly video report, and I'll see you on the next one. And until next time, I wish you a healthy and prosperous trading week.